Quick reminder, the 40% off coupon code for my amazing programs on building your wealth, including stocks, options, and trading, expires tonight on June 30th. Take a look at that, linked below. Hey everyone, me Kevin here. Thousands of people are about to get checks from Robinhood, and I have a list of exactly how much money everybody is getting. But first, let me give you a quick breakdown as to what the heck is happening. So basically, Robinhood and FINRA entered into a settlement agreement where FINRA gets to go, here world, these are all of our complaints about Robinhood, and Robinhood basically goes, okay, we don't agree or disagree, but okay, we'll pay you $70 million, okay. It's kind of what's happening here, but we should go into some of these details. Just know that Robinhood is not officially responding to these items here. Maybe they will separately. I don't know if they can or can't. I'm not an attorney, but we are gonna go through at least what FINRA's version is. And then let's go through to see who's getting paid and for what and how much. So here's the thing, FINRA, and we're gonna go through the legal brief as well where we see some of the allegations. FINRA is demanding that Robinhood pay $12.6 million in restitution to customers and $57 million in penalties for screwing up. FINRA's very unhappy, and the allegations they make are, number one, Robinhood misled folks in terms of how much negative buying power they had, how much actual cash was in their customer accounts, and by misleading them, leading to, in some circumstances, potentially panic selling or losses that wouldn't have otherwise occurred. Additionally, Robinhood also ran into some issues where folks believed they had margin trading turned off, but they still ended up somehow getting involved in a margin trading despite believing they had margin turned off. Or in the specific case, in June of 2020, somebody just saw a screenshot, a 20-year-old college student, saw this particular screenshot of their buying power sitting at negative $730,000 on a $16,000 account. This was during an option execution time frame where funds had not settled yet, so they got hit with the debit and not the credit yet, and so their account showed a negative $730,000 balance despite having margin turned off. And so FINRA clearly identifies that instances like this have led to many big losses for customers. In fact, they claim that thousands of customers suffered more than $7 million in total losses. And if you lost money because of inaccurate negative cash balances, you are entitled to a restitution. In fact, $7 million is being returned to folks who lost money because of inaccurate negative cash balances. Additionally, FINRA alleges that Robinhood was somewhat lax in how they approve people for options trading, essentially saying that their options account approval bots ignored many red flags indicating that certain accounts or certain individuals probably shouldn't be eligible for options trading. FINRA is also very upset about the most serious outages that occurred between March 2nd and March 3rd with Robinhood, where customers lost tens of thousands of dollars, and FINRA is requiring the firm to pay more than $5 million in restitution to people affected during that time frame. So if you were affected and you lost money and complained about it because of inaccurate negative cash balances, or because of the outages that occurred on March 2nd and 3rd, you might be eligible for money from Robinhood, or for getting some money from Robinhood. Now, regarding AMC and GME, the only thing I could really find in all of this was that FINRA found that between January 18 and February 2021, which would encompass the GME crisis on January 28th, FINRA basically just slaps Robinhood and alleges that it failed to supervise the technology it relied upon for core broker services. There's nothing specifically related to restitution for GME. Now, they do include that time frame in here, which kind of implies that they also looked into the GME situation, but aren't actually assessing any kind of restitution for that. Now, I'm not sure if that totally closes the door to any restitution coming from the GME crisis, where folks weren't able to buy option contracts or shares of GME. I, though, would imagine that not being able to buy makes it very hard to prove a loss. Whereas when Robinhood just shut down on March 2nd and 3rd, you could kind of prove your decline in market value potentially more easily. So my guess is this probably closes the door on the GME crisis. Now, what we can do as well is we can look at some of the actual allegations in their report here. In here, FINRA alleges that customers who had either Robinhood Gold or not were eligible to turn off margin investing. But despite the fact that people could turn off margin investing, it says here, and again, this is FINRA's allegation, that Robinhood has allowed approximately 818,000 customers who had been approved for options trading, either instant customers or gold customers, with margin disabled to make trades such as option spreads that could automatically trigger the use of margin. So all of a sudden, people who thought margin was off were actually using margin. This is again where FINRA talks about the unfortunate suicide of the 20-year-old college student who was at home from college at the time of the incident. We also have another allegation here, and this is again mentioning here that Robinhood displayed inaccurate cash balances to more than 135,000 customers. The firm displayed these erroneous cash balances to Robinhood Instant and Gold customers who either were randomly provided a test account feature by Robinhood or who enrolled in the firm's cash management program. They were left essentially with, in some instances, false information regarding the amount of cash they had available. Some other allegations here. First, Robinhood misstated the risk of loss associated with certain option spreads and then provided false information about actions the firm would take on those spreads, resulting in losses totaling $5.73 million. So potentially this portion we talked about in with money going out. So you've got one set of money, about $5 million here going out for outages suffered March 2nd to 3rd. This other $7 million here regarding these negative cash balances probably also had to do with this here, option spreads. So you probably had to have some kind of loss related to option spreads to qualify for restitution here. They also go as far as breaking down Robinhood's poor explanation of option debit spreads, like call debit spreads here, calling it straight up false and misleading, some of the information that Robinhood had on their website. Robinhood also issued erroneous margin calls and margin call warnings to over 100,000 customers. The two significant events occurred in a 3-month period in 2018 and affected more than 100,000 customers, leading to $1.65 million in losses. So you can kind of see it looks like you would have had to have been involved in, at least for a portion of this, either March 2nd or March 3rd, 2020, or you would have had to have lost money in 2018, or I'm sorry, between October 16th and September 2019, where Robinhood issued you an erroneous margin call, or you lost money due to those call debit spreads and inaccurate balances showing up. So those are, it look like those are the folks who are going to be getting restitution. Could be others as well here. Some other statements and allegations here FINRA makes that Robinhood used the label equity rather than market value in certain cases, which is bad because your market value could be $1 million, but if half of that is debt, then your equity is only $500K, right? But if it shows $1 million as equity, that overstates how much money you actually have, which could lead you to take on riskier trades. We've got a mention here that Robinhood offered free stocks to folks, but the firm did not disclose that there was a 98% chance that the free stock awarded would have a value of only $2.50 to $10, despite advertising stocks like Apple, Ford, or Sprint, which Ford at the time was worth more than the $15 when it sits now. But anyway, it's worth mentioning that you can still get 2 free stocks with Webull. If you go to Webull, go to metkevin.com/Webull, deposit $100, and they'll give you up to 2 free stocks totally for free. And they also, somewhere at the bottom of their website, show you what your odds are of getting that, I think. I don't know, I'm not an attorney. I'm just pitching Webull because I use them daily, but I also use Robinhood daily. So yeah, anyway, okay, pitch over. Let's keep going. So some other allegations or interesting notes that I saw under here is Robinhood didn't pay attention to mission critical systems. We've got a note over here that Robinhood has to pay restitution of exactly $12,598,445.16. The rest are fees and penalties. You've got Dan Gallagher for Robinhood signed this, and they're being asked to wire transfer the full amount. So that's going to be a big bill that's getting sent over. And then I'm not sure if Robinhood or FINRA is sending this money out, but they're literally sending thousands of dollars to some people. I mean, here you've got $1,400 going out, $3,300 going out, $800, $190, $23, okay? $10,200. So you've got a bunch of customer numbers here. These aren't actual numbers. These are just the number of affected customers. And this goes on and on and on. I mean, we go out to over I think 2,000 customers here. This is a list of 2,832 customers. And for Schedule 2, we've got total restitution of $1.6 million. And for Schedule 1, which I believe Schedule 1 has to do with the options, I think that's where the big dollars are coming out. There are less, folks. But restitution for Schedule 1, $2 million right here. So not exactly sure where the schedules are for the other, I don't know, $9 million. But I can show you where this is in case you want to look this up yourself if you've been given like a reference number or contact number. Basically, what you want to do is you just want to type in to Google FINRA orders record financial penalties against Robinhood. I'll show you exactly how to do this. So you jump in to Google, type it in, FINRA right here, FINRA orders record financial penalties against Robinhood. Click on this. You're gonna go over here to, this is the statement we took a peek at. This right here is the Robinhood Financial LLC action. And this right here is where you're going to be able to see all of the individual sums of money that folks are owed. See $6,880, so on and so forth. So a lot of folks are getting checks from Robinhood for what happened here. Now, what do I think about Robinhood going forward? Well, folks, personally, I think this is, look, Robinhood's massive. They are one of the biggest players in this space. Their website analytics show a slight decline over the last couple months, but quite frankly, their website analytics appear to be way higher than they were before the January debacle. I think this is, a tiny kind of slap at Robinhood. I mean, think about it. $70 million is probably about 0.1% of their market cap, because they're probably worth in the private market right around $70 billion, which means really, if you had $1,000 net worth, that'd be like giving $1 out of $1,000. Or that kind of be like giving $100 if your net worth was $100,000. So it gives you a little bit of kind of scale in terms of how big this slap is. And so I'd say overall, this is a slap at Robinhood. Obviously, I expect that they fixed a lot of these issues already. I think Robinhood's going to keep growing. I think this is just going to get written into the history books and everybody's going to move on. Hopefully this gets fixed and things like this never happen again. The big thing is learning lessons and moving on. So obviously I wish Robinhood and the staff the best. This is a pretty scathing report. But remember, it's also a one-sided report. Though some of those things, there's probably a good chunk of truth in a lot of what happened there with FINRA. I don't know, I can't speculate, but look, people are gonna be getting money back, so at least some of the wrong is being righted. And as long as Robinhood is fixing these issues going forward, it's good. They're here to stay. They're one of the biggest trading firms, and overall, this is a small little needle prick for Robinhood. It'll be okay in the long run for the company, for the staff, for people who invest in the company. I don't think it's really gonna make that big of a deal for their IPO. If anything, it's better that this chapter has been closed before the IPO, because now that uncertainty of how big's the fine gonna be in the future, are they gonna get fined, is closed. Now, I do think this kind of closes the door on maybe like any kind of restitution being paid for the GMEers who weren't able to buy calls or shares. But we'll see. We'll see. If somebody was mistakenly liquidated, maybe they'll be getting some restitution from this. Although it looked like we were mostly looking at dates between 2016 and 19 with false cash balances, certain options, and then March 2nd and 3rd of 2020. No specific mention to January 28th in this. Anyway, there you have it. Thank you so much for watching it, folks. We'll see you in the next one.